What's going on, guys? This is Luke here. Today I'm going to make a little bit of an educational video, something a little bit different, and I just want to talk about how I've been utilizing the 5-minute chart a little bit differently to help me find better setups, and how I've been implementing this to basically improve my win rate. So there's a few things. I'm going to probably go over about 3 examples today. I'm going to go over today's example because it really made me think about this a little bit more, and how I wanted to make a video on it. So to start, this is basically the rundown of my strategy right here. This is very briefly. I look for a higher time frame liquidity sweep or an imbalance fill. So either the hourly or the 4-hour. I look for a liquidity sweep or an imbalance fill. On the 5-minute, what I look for is a shift in the order flow, and we're going to get into that in a second. And then on the 1-minute chart, I look for a shift in order flow, a break of structure, and a fair value gap. And then I target the low resistance liquidity on the opposing side. Now, when I say a shift in order flow, what I'm basically looking at is, so if I'm looking for a bullish trade, I want to see bearish confluences get disrespected and bullish confluences get respected. So I want to see the flow of bearish price action get disrespected, and I want to see the flow of bullish orders getting respected to show me that price wants to push up. So this is what I'm looking for when I'm talking about a shift in order flow. I'm talking about the 5-minute to break structure, to invalidate a fair value gap, to respect a fair value gap, or respect a inverse fair value gap. Do I need all of these? No. But these are the main criteria. So for example, sometimes you might not get a break of structure. You might just get an invalidation of a fair value gap, pull back into an inverse, retest it, and go. But this is the criteria that I'm looking for that's going to show that it's going to show the opposing order flow getting disrespected, and then the order flow of the trade that you're looking to get into get respected. So let's just clear that off. If you guys want to write that down, screenshot this. Again, you don't have to be meeting all of these, of course, right? Obviously, the more, the better, but you're just looking for basically something like this, and this is the main strategy. So I'm just going to clear this off for now, and then we're going to get into example number 1. Oh, guess I can't clear it. Oh, there we go. All right, so today I want to talk about this example on ES. Now, the thing with this trade today on ES was that it didn't have a higher time frame liquidity sweep, but we had the shift in order flow and the 1-minute confluences in order to take the trade. So personally today, I was looking for shorts. I was looking for these London highs to get swept and for us to come down and take out the London lows and the Asian lows, but that didn't end up happening. So what ended up happening after market open, and I didn't take this trade today because we had news at 10 and I didn't want to trade before the news. So unfortunately, I didn't make any profit off this, what I'm about to show you, but it's something that I seen, and I actually just paper traded at the same time just for practice. And I just thought it was a good video to make a topic to make a video on, because it's just, I just thought it was this is what I've been implementing, and it's been working so well. So basically, we had this sweep of liquidity on the 15-minute. Now, normally, obviously, I base my trades off higher time frame liquidity sweeps, but we had this lower time frame liquidity sweep. And the main thing is we had these equal highs that we were targeting. And NQ, which I'll get to after, NQ was ripping up and already taking out these highs a little bit after. So I was anticipating for ES to follow on its path. Again, we didn't get a higher time frame liquidity sweep. We got a lower time frame liquidity sweep, but the shift in order flow on the 5 minutes is basically what made me want to take this trade. So here's where I'm talking about the shift in order flow, okay? At the 9:30 candle, we come down and we sweep out these lows. Okay, that's great. Then we push up. So number 1, we break structure. So obviously we break this 5-minute high, which consists of 1 candle up and 1 candle down. We break structure. So that's number 1, okay? Number 2, we also disrespected this bearish fair value gap. So you got to think about it, right? If price was going to continue bearish, it should tap into this fair value gap and continue to push down, right? But instead, what does it do? Price runs through this fair value gap and invalidates it completely. So we have, not only do we have an invalidation of a fair value gap, we have a break of structure now. So we have 2. Then price wants to come down and retrace all the way back down after we break structure, right? So, again, we broke structure to the upside, we pulled back down, we inversed a 5-minute fair value gap, we ran through it, so we invalidated the bearish fair value gap, we broke structure, we retraced all the way down. This at this point is just showing me that price wants to push up and respect bullish order flow, because we're completely disrespecting the bearish confluences. If we were going to go bearish, we would top off this 5-minute imbalance and continue down. We broke structure, we pulled back. If we got to pull back into this 5-minute inverse, that would be even better Confluence. But you got to think about it. We have equal highs up here. We ran through a bearish fair value gap. We broke structure. From here, you're scaling to your 1 minute, right? From here, look, again, on the 1 minute, we have a little bit of a choppy price action right here, right? But what I see here is we have these highs right here, these 1 minute highs, and then we close above them. So you could have just entered right here. Even though it is a weird close, we left equal highs right here. So you have to think about how strong of a draw on liquidity this is. We are failing to utilize the bearish confluence just to continue to push down. We have a break of structure on the 1 minute chart. You could have easily entered this trade and looked for one TP here and then continue to TP to the upside. But the main takeaway of this, what I'm talking about, is how 5-minute confluences are getting disrespected and the bullish confluences are getting respected. So again, okay, lower time frame liquidity sweep, right? We break structure. We completely run through and invalidate a bearish fair value gap. So that means bullish order flow is taking over at this point, right? We have as well, which I forgot to mark out, this very small 5-minute bearish fair value gap, which also gets run through and we retest it. So this now became an inverse. I forgot to mention that. So again, you look at it, right? Bearish fair value gap got disrespected. This one got disrespected. We broke structure. We retested an inverse fair value gap, showing that order flow is switching from bearish to bullish. And we're probably going to continue up to these highs. You look on the 1 minute, it's basically the same thing. We're failing to utilize bearish confluence to the downside. We have this break of structure on the 1 minute. You could enter right here and target those equal highs. That's going to go over trade number 1. We're going to go into example number 2, but the main takeaway again is invalidating the 5-minute confluences, the bearish confluences, and how do I explain this? Basically, respecting, I guess you could say, respecting the 5-minute bullish confluences. But that's going to wrap up example number 1. Let's get into example number 2. All right, guys, so example number 2 is on ES, and this actually was about a week ago. I remember I missed this trade as well, but it was not the greatest setup, but it follows all the points. That's the main thing of this video, is to talk about the ideas and order flow on the 5-minute, which is where I'm basing a lot of my trades off of. So, for example, we sweep out all this higher time frame liquidity. We're anticipating for price to come up and take out this low resistance buy-side liquidity, right? Now, this is the thing on the 5-minute. After we have this dump, we invalidate this. Look at this, okay? I'm going to draw them all out so you see. We invalidate this bullish fair value gap, and we close above and inverse this fair value gap. Did we get a break of structure yet? No. But what we do is we break and invalidate both of those fair value gaps, showing that bearish order flow is getting disrespected. If bearish order flow is going to get respected, those bearish fair value gaps would have held weight and then price would have pushed down from them, but they're not. We closed above both of them. Then we pull back and we tap into this inverse fair value gap. So this now becomes an inverse fair value gap. At this point, you can scale down and look for longs to target these highs, these highs, these highs, whatever. Now, is this the greatest example? No. Personally, I would be liking a trade to come back into equilibrium. Like if it came back into this 5-minute fair value gap right here and respected it, that would have been perfect. That's what I was looking for. That's the only reason I didn't take this trade. But the point still stands, right? You get that higher time frame liquidity sweep. You invalidate the bearish fair value gaps. You retest an inverse fair value gap, showing that bullish confluence is getting respected and bearish confluence is getting disrespected. You can scale down here and look to long, right? It's just a matter that the bearish confluences are not holding and they're not being respected, and the bullish confluences are being respected. So it's just a matter of invalidating the confluences. So for this example, you're invalidating the bearish confluence and you're validating the bullish confluence. Again, on this example, we never broke structure, but we can treat a invalidation of a fair value gap the same as this break of structure. But another thing also, you see how we have this fair value gap that we run through first? You never want to just have this one get invalidated and then trade into this one. You want to make sure all of them get invalidated first, because price can invalidate this one and then come down and reverse off that one, right? So again, in this example, we inverse, or we invalidate this bearish fair value gap and this bearish fair value gap. We tap back into this, creating an inverse. You scale down and you look for longs. Again, would have been better if we had equilibrium. We pulled back into this fair value gap, but the point still stands. Let's get into example number 3. That's the final example. All right, guys, so example number 3 here, we're going to look at a short, and the point of these examples is to basically not give you picture perfect examples, but to just demonstrate the concepts, right? So on this trade, we have a sweep of higher time frame liquidity. So since we're going to be looking to go short here, what do we want to see? We want to see bullish Confluence and bullish order flow get invalidated, and then we can scale down to our 1 minute and look for shorts. So we have this big push to the downside, and what do you notice? We invalidate and completely run through this bullish fair value gap. So that's number 1. Number 2, we break structure on the 5 minute, right? So not only did we invalidate that fair value gap, but we broke structure. So that's 2 great confluences to show that bullish order flow is not holding and bearish order flow is taking over. From there, we create this 5 minute fair value gap. Price taps into this 5 minute fair value gap. From this point, you can scale down to your 1 minute. On your 1 minute, you look for the exact same thing. You want to see bullish order flow getting disrespected and bearish order flow getting respected. Let's actually scale down and see what we could have found, if anything, right? I think I actually took this. Yeah, I did actually take this trade. And it was kind of the same thing, but let's just look at it from a fresh perspective. So you could have said you had this higher time frame liquidity sweep. We have this miniature bullish fair value gap get invalidated right here, becomes an inverse. I think this is the exact trade that I took, and then you entered off this bearish fair value gap, something like that. But it's the exact same concept. Let's start from the top one more time, okay? Higher time frame liquidity sweep. If bullish order flow was going to hold, this bullish 5 minute fair value gap would have held and price would have ripped off it, but it didn't. Price ran right through. It also broke structure. We pulled back in and we're respecting a 5 minute fair value gap. We have low resistance sell side liquidity that we could come down and target. On the 1 minute, it's the exact same concepts as the 5 minute, right? We have this lower time frame liquidity sweep. We are already in downtrend structure, but we invalidate this bullish fair value gap. Again, if bullish order flow is going to hold, this would have held and price would have pushed up off it, but it's not. We broke below it. We inverse it, and we get a bearish close. So we have even more confluence to show that the bearish order flow is taking over the bullish order flow. We enter there, and you target down to that low resistance sell side liquidity, wherever it is. And that's pretty much it. So all you're looking for, again, is after you get that sweep or higher time frame imbalance fill, you want to see either a break of structure, you want to see fair value gaps get closed above or below, depending which way you're trading. You want to see inverses getting respected, or you want to see just regular fair value gaps getting respected. This shows that order flow is being respected in the direction you're looking to trade. You look for that on the 1 minute as well, and you're going to have such a higher percentage of win rate. Like before, when I used to wait for liquidity sweeps, I used to just wait for a bearish close and a bullish close. But at the same time, we'd be trading into a fair value gap, and I was losing a lot more trades. And now that I've implemented this, I've been winning so many more trades, and I'm excited to just keep using this and see how it plays out for the rest of the year. But that's going to wrap up this video, guys. I hope you guys took something away. Again, go through and back test and look at examples of this, and you'll definitely find cleaner examples of this where you actually see price retrace to equilibrium and a lot better examples. But this happens literally every day on the 5 minute and the 1 minute. So just keep an eye out for it and keep practicing, and you'll figure it out. And it'll definitely bring up your win rate. But that's going to wrap up this video, guys. I hope you guys enjoyed. I'll see you guys with another trade recap or something later this week. Until then, give me a like, subscribe. I'll see you guys in the next video. Peace.